Hello everyone, and thank you for watching this weekly technical analysis video. It's Monday, August 7th. I'm Cristina Bartanidou, investment analyst, and at this video I'll present my analysis on euro dollar, pound dollar, and Aussie dollar. This week's calendar includes US CPI inflation figures, UK GDP growth data, and China's inflation and trade figures. So starting first with euro dollar and US CPI inflation figures, which will be released this Thursday. Expectations are for a peak up to 3.3% year on year in the headline inflation, which could raise some concerns that the battle against inflation is not over yet. Perhaps it could increase the odds for a rate hike in September, for a 25 basis point rate hike in September, especially after the rebound in wage growth data last Friday. So if that proves to be the case, euro dollar could extend this weakness, and weaker than expected data could also add stronger downside pressure in euro dollar, likely bringing the 1.0930 region back under the spotlight, where the price bounced up last week. This is the trend line coming from September 2022, so it's considered a crucial support zone, a break of which could confirm additional declines, especially if the price closes below the 1.09 level. Then we may see an extension towards the 1.0830 barrier, while lower than that, the 200-day moving average could be closely watched as well at 1.0755 at the moment. Well, from a technical perspective, the indicators over here are reflecting a negative bias. The RSI is below 50. The MACD keeps weakening below its red signal line. So the risk for a downside correction is more likely than an upside one. Nevertheless, if the rebound in the stochastic is right, if we see an upside reversal, then that could take the price towards the 20-day moving average at 1.1080. Stronger than expected CPI inflation figures could trigger such an increase, while higher than that, higher than the 20-day moving average, the pair could next test the 1.1145 and 1.1170 region, a break of which could then take us up towards that ascending line seen around 1.1220. Now turning to UK GDP growth figures and pound dollar. Well, the UK economy is expected to grow at a very, at an almost flat pace. Year on year, the economy is expected to have grew by 0.2%, while on a quarterly basis, the economy is expected to show zero growth. So that could disappoint investors, especially as the pair is trying to overcome the 1.2740 and 1.2770 resistance. If the pair fails to overcome that, it may reverse lower to retest the lower band of this bearish channel at 1.2590. While lower than that, a break below that bearish formation could strengthen the sell-off towards the 1.2485 key constraining zone. If that fails to hold, then the 1.24 round level could be the next area to watch ahead of the 200-day moving average, currently around 1.2325. Now, if the data surprise to the upside, providing some comfort to the Bank of England to raise interest rates once again in September, the odds for such a scenario is currently around 65%. So if the odds increase, we may see pound dollar rising towards the upper band of this bearish channel at 1.2855 at the moment. This broken ascending line at 1.2915 could be also watched, given the limitations around that line at the end of July. Nevertheless, if we manage to overcome that, then the 1.30 round level could be the next target. And if that proves an easy obstacle to overcome this time, then the focus will fall on this ascending line, where the price posed a couple of times since April 2023. Currently is around 1.3065. That bullish scenarios is currently the odds for such a bullish scenario are low, because we can see that the indicators down here are also keep trending lower within the bearish territory. And now turning to Aussie dollar and China's trade and CPI inflation figures. The trade data will be out on Tuesday, while CPI inflation figures will come out on Wednesday. The data will be closely watched because China has released a couple of stimulus measures at the start of this month, but investors believe that this is not enough to boost consumption. So worse than expected data could back this narrative, probably disappointing Australian businesses which have tied export relations with China. And if that proves to be the case, we may see Aussie dollar reversing lower to test the 0.6485 zone, where it bounced back at the start of June. If that fails to hold, then the sell-off could stretch towards the important 0.6420 area, where the 2020 support trend line and this ascending line coming from February 2023 are intersecting each other at the moment. Not far below that, the 0.6385 zone could also be in focus, given the rebound around that area from September 2022 and November 2022. If that proves a fragile base, the sell-off could worse towards the 0.63 round level. From a technical perspective, decline is not is likely, given the negative trajectory in the RSI, and the stochastic oscillator has barely shown any improvement so far. So the bias is still skewed to the downside. So if the data surprise to the upside, showing that China's stimulus measures are affecting positively consumption, then we may see a pickup above 0.6595, which the price has been struggling to overcome. Then above that, this tentative ascending line could add some pressure on the pair at 0.6645, probably blocking the way towards the simple moving averages, all seen within the 0.67 and 0.6735 zone. We may see some consolidation here before all the attention turns to this important resistance trend line from April 2022. The pair failed to overcome that zone a couple of times, so that could be a big challenge for the market. So that's all for this week's important pairs that might attract attention later this week. Hope you have a great trading week, and see you next time. Bye bye for now.